Peace, peace. This is Brother Tyraine. I'm back here to do a short little video. This video I want to show you actually how to draw support and resistance on the weekly and how to box the price in on the weekly. This is for my long-term traders. We're looking to make trading very passive, where you can actually trade, where you can hop in a trade and you can wait a couple of days. You don't have to be checking it every 5 minutes. This is for people who work, who have a 9 to 5, who don't have time to actually sit in front of their computer and do scalping and other techniques. So this is long-term trade. So we're going to start with the EURNZD. We're in trading view. We make the screen big. We want to make the screen big so that you can see it. What we're going to do is go to the weekly. We're going to put the price around the middle of our screen and see if we can find our support and resistance lines. It's pretty clear that it's one right here. Probably box us in the best. And down here, we're going to go back some, back test and see. This one right here looks pretty good. We can probably go with this one. Let's see how this one looks. Is that about halfway? Nah, not really. Let's see. It's something better. Could probably go here. This might be a little better. Okay. It looks like it's moving a little bit, so we're going to go with this one right here. It's already on the move, so this would have been halfway, but I think it's already starting to move some, so we're going to go with this. So now that we have our support and resistance lines, now we're going to drop our zones, and we're still in the weekly, so we do that by looking at the wick, and we will draw at the end of the wick, so that will give us our zone there. And when we come on the top portion, because this is already halfway down here, we're going to use the inside to draw our other line. So we're going to come inside the zone, and you can actually want to make sure that these are about the same width. But this right here looks like a good spot, because if you see, you notice that this wick is touching right there. We can back test a little bit, see if we see anything else. We got another touch there. So when you see these touches, that's a good sign. I like to, sometimes I measure them just to see if we got about the same amount of wicks, the same amount of pips. That's 49. And remember, this is the weekly, so it's going to be quite a few pips. Yeah, 50. Yeah, that's good. So we're right about equal. That's where my two lines are going. We basically have this thing blocked in on the weekly. So now what we're going to do is we're going to get our coordinates to make sure that we're extremely accurate. So at the top, you notice it's O, H, L, and C, and that stands for open, high, low, and close. So we can look at one of these two candles. Since it's the red, it would be the open. And so it's 71734. And we'll get this number in here, 71734. And then we want to get the tip of this, which is the high, 71244. So I'm going to put this in. 1, 2, 4. We got the top portion. We'll do the bottom. We'll use this one. So this would be the open. 68346. So I'm going to put that coordinate in. 6. And we're using, I believe, this wick here. This is the low. 67857. 67857. Okay. Now we have our two zones. Next, we want to box these in. We're going to box them in. We're going to make them red. And we're going to put in the same coordinates. So you go down to settings. And you put in the same coordinates. 7, 1, 7, 3, 4. Negative. And some zeros. 7, 1, 2, 4, 4. And some zeros. Bam, there you go. You got your top, which is your resistance. And then we're going to do in our support 6, 8, 3, 4, 6. Negative. And 6, 7, 8, 5, 7. All right. And we're going to get rid of these lines. We don't want too many numbers over here. Confused. So we get rid of these lines. This is what it takes. You have to draw up charts. This is it. This is trading. Drawing up charts over and over and over. It only goes from zone to zone. It can only go up or down. So we got this boxed in now on the weekly. So now we can go to the daily. And let's see here. We want to make sure it's spread out. Okay, and let's look for a trend line on the daily. So we're going to go to the daily for our trend line. And it really already broke. Trend line, that's one right there. Man, that could be one. That's kind of pushing it. You know, realistically, it would be down here somewhere. You already passed the trend line, but so this is safe to say that right now this is looking like on the daily for a buy. You can probably draw this in right here, and this does look like a pretty good space. It did a pullback, came back, so you would be looking to go up on the daily to this line here. We can go down to the 4 hour and really look for our entry on the 4 hour. Smaller. All right. So if you notice, it's actually in consolidation on the 4 hour. This is pretty much consolidation. On the 4 hour. You notice this right here. But if you notice this trend line, which we drew on the daily, hits here, it broke, it came back and touched and went up. So it still needs to break this zone here, but this is definitely looking like a buy. This would have been, you really would have got in right here, and then you would have already been up. Let's see where we at. Got in here, you'd already be up 50 pips. You know, you really could call it take profit. And it went as high as, actually went as high as 77 pips. So it's made a major move already. Already's made a major move. This is exactly what you want to do though. And when you do this type of trading, you're going to be risking quite a bit. You know, if you would have got in this here, your stop loss would have been somewhere down here. So you might be risking 40, 50 pips, go in low, do 10 cents, do $1, $40, $50. But you stand the gain on this long term, 170 pips, a little over 170. Let's see. Scroll down. Yeah, 188. And that's from there. If you had caught it from here, you're looking at 224. And so you risk your risk to reward is pretty good on this. And you probably wouldn't just ride it up there. You would adjust your stop loss. You would take profit on some, maybe have multiple positions open. Back up a little bit. I'm going to go to the daily. And just look at this now from a different angle. So you can see the consolidation on the 4 hour. You have this trend line. You have it already drawn up. And really, it's just in consolidation. So you're really just waiting for it to break out of this. Once it breaks out of this, if it breaks on this uptrend, it'll probably touch here. If it comes past here and it breaks this, then you can expect it to keep going. So now that you have it drawn up, what you can do is just wait. And every day, check it. Check it on a daily. Check it twice a day based on the 4 hour. And once you see it make a move, because this already made a move, this would have been a nice entry on that 4 hour. And so this is what you're looking for. But we like to teach, passive trading. I send out signals based on the daily. So, you're going to be risking quite a few pips. So you have to make sure that you keep that in mind. But at the end of the day, these trades go for days. The last trade I sent out went for 3 days straight. So we try to catch runs. I don't have time to sit in front of my computer. I have other obligations. So this allows me the freedom to get into a trade and, I'm out in a couple of days. Long-term trading, passive Forex. Again, I'm your brother Tyraine L, aka Ty Sticks. Check us out at Tyraine.com. Y'all have a great day, and we'll see you on the other side. Peace.